You are not losing money because you are failing. You are losing money because you are being exploited by design. Here is the hidden layer. Your card just got declined at the gas station, not because of fraud, not because the machine is broken, because your balance hit zero. And the bank, the institution holding your money, responded by doing exactly nothing. It just said no in front of everyone. That moment is where this story starts. Because the way a bank treats you when your account hits zero is completely different from how it treats you when it hits 100,000, and it is unrecognizable compared to how it treats you at 1 million. Same bank, same building, completely different institution. Here's how it actually works. 8 levels, and the rules change at every single one. Level 1. Negative balance. The overdraft fee is $35 per transaction. 3 small charges while your account is negative. That is $105 in fees on top of whatever you are already short. You did not have money, so the bank gave you less of it. No person made that call. A rule in software executed the moment your balance crossed zero. The machine does not know your paycheck is 2 days late. It does not know the charge that pushed you negative was a gym membership you forgot to cancel. It knows one thing: your balance is negative. Everything follows from that. Your brain does something dangerous here. Psychologists call it learned helplessness. After enough declined cards and automated fees, you stop fighting the system. You start believing you are the problem. That is exactly what the system needs you to believe. You are not a customer here. You are a cost the bank is trying to recover. Think the bank loses money on your overdraft? Stop being naive. They processed $7 billion in overdraft fees last year alone. You are not a customer. You are the product. So if this is how they treat you when you have nothing, what changes the moment you actually have something?
Level 2. Low balance. $350. That is the minimum annual maintenance fee drain on a low balance account, quietly extracted automatically from the people who can least afford it. Now here is why the bank loves you here. You pulled it back from negative, $200, sometimes $400. Then rent hits and you are back at $60. $12 to $15 a month automatically withdrawn because your balance did not hit their minimum, usually $1,500. If you already had that money sitting idle, the fee vanishes. Because you do not, you pay for the account designed to hold your money. The bank lends your deposits to other customers at 7 to 24%. They pay you 0.01%. That spread is not a coincidence. That is the architecture. Your brain is wired to ignore small recurring losses. Psychologists call it the pain of paying threshold. $12 does not register as a threat. $144 a year, extracted invisibly forever. That is the design. The service is not hostile. It is indifferent. There's no relationship here. There is a transaction. You are a small one. And if you think that's bad, the real system hasn't even started yet. At the next level, they use your own financial behavior to lock you out of wealth for decades. Here's how.
Level 3. Stable income. Most people think getting a raise means they finally beat the system. They have no idea the system just upgraded its interest in them. Direct deposit hits $3,000 every 2 weeks, on schedule. The bank does not call to congratulate you. Your pattern shifts from irregular to consistent. The system recategorizes you quietly. Credit card offers arrive, real ones. Rates still high, 22 to 26%, because your credit history is short, but the door is open. 6 months ago, this bank had nothing for you. Now there are targeted banners inside the app. Here is the neuro layer nobody talks about. The marble lobby, the serious suits, the official language on every document. These are not aesthetic choices, they are authority signals. Neuroscience shows that institutional environments trigger a cognitive bypass. Your skepticism circuits partially shut down in spaces designed to project power. You trust the bank not because you analyzed it, you trust it because the architecture told you to. You are a customer now, commercially, which means you'd be replaced without ceremony if you left, but while you're here, the bank wants to keep you.
Level 4. Growing savings. Your loan rate dropped to 6.8%. Your credit limit tripled without you asking. The bank is handing you more rope. Here is exactly why. $18,000 in savings, $22,000 in investments, credit card paid in full every month. When you finance a car, the rate falls from 11 to 6.8, not because anyone likes you more. Your profile shifted the risk calculation. The price of money itself got cheaper. This is the mechanic most people never see. Better rates mean less paid for the same things. Less paid means more capital stays in your hands. More capital builds faster. The gap between you and someone 2 levels below is not just income, it is the cost of every dollar borrowed, and that cost is now working for you.
Level 5. High savings and assets. Here is where most people think they have finally arrived. They have not. They have just become interesting enough for the bank to start protecting its investment in them. Combined assets above $150,000. The phone line is different, priority queue, shorter hold times, more senior staff with actual authority. When something goes wrong, it gets resolved in the same call. A dedicated banker appears, a named contact who emails you directly. Here is the trap. Once you have these perks, the direct line, the named contact, the priority service, your brain activates what psychologists call the endowment effect. You start valuing what you have more than what it actually costs you. Switching banks feels like a loss, even if staying is quietly costing you in hidden fees. Your brain fights harder to keep the status than to protect the cash. That is not loyalty. That is loss aversion being weaponized against you. Pre-approved offers arrive. The bank is now pricing your future, not just your present.
Level 6. High net worth. 0.04% in annual management fees on a managed portfolio. On $500,000, that is $2,000 a year. Now here is what that fee buys, and what it quietly does not. $500,000 to $1 million in investable assets. The bank stops being a place you visit and becomes a service that arrives. Wealth management enters the picture. Investment planning, tax coordination, estate guidance, one relationship. Someone asking about your goals, your family, your timeline. Not because they care, because your full picture unlocks their full product suite. When something goes wrong, a wire stalls, an account freezes, it resolves in the same conversation. No callbacks, real authority, real time. The gap between this level and level 2 is not better service inside the same institution. It is a different institution operating inside the same building.
Level 7. Very high net worth. Above $5 million, the bank stops selling you products. It starts building them for you. And the prices it charges everyone else no longer apply. Rates not publicly posted. Investment products requiring accredited investor status. Your mortgage rate is not slightly lower than what a level 3 customer gets. It is meaningfully lower. Tens of thousands of dollars in difference over the life of the loan. Your advisor is now a coordinated team. Investments, tax strategy, estate structures. The room they meet you in does not look like the room where other customers wait. Banks have discretion built into their internal policies. Most customers never see it. At this level, it runs entirely in your favor. Research on institutional behavior shows organizations mirror the status of whoever they serve. The more resources you represent, the more the system bends. This is not conspiracy. It is organizational psychology operating exactly as designed.
Level 8. Ultra-wealthy. Private banking is to wealth management what a charter flight is to first class. They both get you there. The experiences are not the same category. You do not have a banker, you have a private banker, someone managing fewer than 20 relationships, entirely focused on those relationships. They understand your full picture, what you are building, what you are protecting. Direct access to decision makers who create arrangements no product menu would ever list. Loan terms negotiated, not published. Minimums waived because the relationship justifies it. Transactions that take a retail customer 2 weeks are processed in 48 hours because the right people were already informed. Banks do not break laws for wealthy clients. What they do is apply every legal degree of internal discretion in favor of accounts worth keeping. Fees quietly waived, approvals pre-cleared. The system that was automated and indifferent at level 1 is now human, attentive, and oriented entirely toward yes. You are not a client at this level. You are a relationship, a named priority in someone's performance review. Losing you has career consequences for real people inside that institution. Same bank, same building, 8 completely different realities determined entirely by the number next to your name. What if you understood the rules of every level before you reached it? If you want to stop paying for their design, you need to master this system. Subscribe now, because the moment you stop learning is the moment they win.